art world turned out to be like the stock market, a reflection of political trends and the persuasion of capitalism fueled by greed and gossip and cocaine. This is a quote from a book by Otessa Moshfegh. The book is My Year of Rest and Relaxation. And this is not a book discussion yet. I will discuss the book a bit later. I want to talk about what's going on with those short stocks like GameStop and others, and my thoughts about this. And as far as the market is concerned, this is a Not Even Wrong podcast. It's January 28, 2021. This is Krim Delco. Since the last update this morning, we are down about 1%, and the market is down by 1%. So we are up for the year 19.5%. The market's up 70 basis points. We're outperforming by roughly 18.8%. What's happening short, let's set the stage. So we have basically a mob of so-called retail investors using platforms like Robinhood and other online trading platforms to just drive up stocks that are shorted. GameStop is the most famous one. There are other stocks that simply what's happening is you're short a stock and the mob goes against you, drives the stock from $20 up to $300. You're losing money hands over fist. This is in a nutshell what's going on. Hence my quote. I think the stock market, unfortunately, has turned into a sort of a marketplace for political trends, persuasion of capitalism, gossip, fueled by cocaine and other things. And that's really, in a nutshell, what the problem is here. If you had a real fundamentally driven market where the good things happen and the bad things don't happen, well, then, of course, you wouldn't have these types of situations. But I want to be very careful here. First of all, the main reason we have a marketplace is because we don't know what the right thing is to do. If we knew, we wouldn't. If we knew how to value companies, we would just have an algorithm value them, and that's it. But we don't. So that's why we use a marketplace or the wisdom of the crowd or whatever all these things are called. We don't know how to value companies. We don't know in particular how to value future prospects of companies. That's why we use the marketplace. Now, the marketplace has certain mechanisms, and one of them is the ability to short stocks. In my view, a very good thing because it's a checks and balances thing. It's simply a checks and balances thing. And what's happening is that short sellers are compensated by shorting stocks, and when they go down, they buy them back lower and make money. This is the fundamental idea of short selling. I think what's gone wrong in recent years is that those short sellers have become political. So instead of just sticking to their game, buying stocks that they like, shorting stocks they don't like, they go on TV, they start becoming political, they become disrespectful to companies, they attack companies, they do all kinds of things. They sometimes even spread fake news to drive their stocks. So there's a lot of miscommunication, fake news, bad things going on. And then we have the other side, which is what's going on right now, which is basically a mob of people fueled by access to not just stock buying abilities, but also things like options and other leverage products. They have the ability to drive up stocks to ridiculous values and therefore make it impossible for short sellers to function. So this is, in a nutshell, the stage, and I'm not happy by it in any way or form, of course. My view is that I would like to have short sellers in the market. I actually like to be able to buy stocks that are shortable because it gives me an additional checks and balance. It gives me an additional proof of concept that despite all these short sells, I can still make money with my long thesis. And vice versa, if I'm short the stock, I want to be able to make money despite all the people that are long the stock. So this is, of course, theoretic. In practice, for example, we at Orange Capital Partners have stopped shorting stocks a long time ago, simply because it is very difficult to do. You can, go bankrupt way before things happen, and etc. We unfortunately never had the problem of being caught by a mob that drives up artificial stocks. I mean, artificially up. We were actually short Volkswagen in 2008. Fortunately, we got out on time before the stock went up 10x. So we were almost caught by a bad situation there. fundamentally what you do as a short seller is you look at a company, you think, look, it's overpriced. It's, for example, Nikola Motors, well, it was a company like that that is just screamed short on every front. It didn't make any sense what they were talking about. They were inconsistent. They have no market. They have nothing to show. And the stock still went up to 30, 40 billion. Similarly, I would say today it's stocks like QuantumScape are like that. There's a lot of promise. There's not a lot of fundamental concepts. There's, in particular, also even the trajectory. Even if they succeed, it's not clear how they will win against Tesla. So there are, and nevertheless, the company's worth 50 billion or something like that. So there is this huge problem in the market that because we don't have the checks and balances in place, because we don't have a very strong short selling community, that many stocks can go public. DoorDash is another one, and we'll have more of them, unfortunately. We'll just have a lot of companies going public with no fundamental business, no concept, no nothing. Basically, stocks looking for a business model. Uber is that kind of company, in our view, a stock that looks for a functioning business model. So there's a lot of this mispricings in the market because we don't have the checks and balances. And this is exacerbated now with this huge failure of short sellers with stocks like GameStop and others. On the other hand, I think the short sellers, they have to blame themselves for, like I said, it became political. Even good intentioned short sellers, maybe people like Citron or what's his name, Jim Chanos, maybe they were good intention. Maybe they started out as real fundamental financial statements proven type of investors that read the financial statements and simply don't believe in something, but they became political. They went out there on TV every time they shorted something to drive their message, to have this political message almost. And that's where I think it went wrong. If you're a short seller, just shut up and put up. Don't talk, just put it up. Why do you have to go and market your position? There's an inconsistency there, and I think it's coming now back to bite them, because now the mob is kind of going after them, because the mob, of course, has a political message also. We want, let's say, in the case of GameStop, we just want this company to be valuable. We decide it's going to be valuable, it's going to be valuable, and who are you to argue against it? We don't care about your fundamentals, we don't care about this, we don't care about that. This is very, very bad. It's financial anarchy. It's the equivalent of storming Capitol Hill, the financial equivalent of storming Capitol Hill. It's basically a mob that is unhappy with the representatives, with the professionals that are supposed to choose who is the right and who is wrong. So people are unhappy with that, and they're storming Capitol Hill. In this case, they're storming Wall Street and attacking the financial system at its heart. So this is nothing wrong, nothing very different between them and what happened on Capitol Hill. And in both cases, I think people should be upset. They should be upset not because the mob did it, because they could. It's because it shows how the system is really not functioning well. So we need reforms. I think forbidding people to buy is not necessarily the right thing to do. I think what we need is, first and foremost, we need rules around this politicization of positions. We need rules for people to go on TV and talk their positions, talk their books. I think it's a tough one, because I'm against curbing speech also. So honestly, I on top of my head, I would say the best thing we can do right now is maybe curb capital exposure, maybe curb leverage, because leverage is one of the culprits here. It is very easy to drive up a stock if you have to put on 5 cents on the dollar. And if all you can lose is a couple $1,000s, but you can drive the stock up by maybe hundreds of thousands of dollars, then maybe it's worth the risk. And that's wrong. That's not necessary. We don't need the kind of leverage that is in the system right now. We can curb that leverage. So this would be one thing I would suggest the brokers do. Don't forbid buying, don't forbid speech, but just curb the leverage, because leverage doesn't serve anybody. Leverage is just a form of greed, and in our view, absolutely unnecessary. And therefore, this would be one way to curb this. Just curb the leverage, make it more difficult or impossible for people to use excessive leverage in their trading accounts. I think the other thing I want to say here is that, again, like I think the GameStop situation is the finance equivalent of storming Capitol Hill. So in both cases, there is a serious problem here We don't want our institutions to be stormed. We want our institutions to be reformed. And if they don't reform, then of course we storm them so they reform. So hopefully our representatives on Capitol Hill have taken the storm that happened as a lesson also to reform themselves, so that, to curb corruption, to make it more palatable for the normal people to deal with our Congress people and also our president and the White House. And the same on Wall Street. I think excessive leverage again is not a good thing. I think politicizing positions, being disrespectful to entrepreneurs, those sort of things should be punished or become more expensive, I would say. And this is one way this happened. The mob stormed GameStop because because people like Citron went out and were disrespectful to the company. It doesn't matter what your thoughts are. What matters is where your money is. So as an investor, formulate your opinion. Don't put emotions in there. Try to be as neutral as you can when it comes to personal respect, when it comes to personal identities, and just talk about the business, talk about the prospects of the business, and don't get involved in, this company should be bankrupt. It's not up to you to decide. It's up to you to put up the money, take the risk, and make the money if you're right. It's not your call to call people bankrupt or useless or bad or anything like that. This would be our 5 cents in this situation. We are not political at all at Orange Capital Partners, but to summarize, we really like the idea of having checks and balances in the market. So we are pro short selling. We are against the politicizing of positions. We are against disrespectful behavior in the media. We are against people using their short selling supposed. This is another thing I forgot to say. A lot of people actually don't even have skin in the game. They have small positions, but they go out on TV and talk a lot about companies. We saw that with Tesla happen a lot, that people probably had very little, if any, skin in the game. Maybe they bought some puts on Tesla. They weren't really short, but they still went out there and bashed the company and used the platform of investing as a political message against the company they don't like. This is wrong. This shouldn't happen. And again, I think what's happening now with this mob storming the stocks like GameStop, it is a reaction that, in our view, it's a bad thing, but it's nevertheless a good thing that the system gets shaken up. Hopefully, we can learn from this and get a better reform of the existing system. We don't have a better system because, don't forget, we are very Popperian in this view. We believe in markets because there is no other way to decide what better idea should replace another idea. What better company should replace another company? Which sector should be reformed by which company? We don't have a better way than the marketplace to decide that. And the financial market is a crucial instrument for that. We don't want to jeopardize that. We don't want to put that into the political morass like we have done with our legal system. That's very dangerous because the outcome of this could be anarchy, and that's the worst. So we don't want that. We want to have a regulated market, a market that works, a market where better ideas replace worse ideas, where better companies replace worse companies. We want to have a market that can finance growth companies, that can give companies a chance to disrupt industries. We want all these things, and we want this to be as apolitical as possible, because politics is not the financial markets are not the platform of politics. The politics belong to the politics, and finance belongs to finance. And unfortunately, both are a bit intermingled, and that's a bad thing. So those would be our main lesson and our main message as far as this whole GameStop situation is concerned. Thank you.